Welcome to Entrepreneurial Edge. Today, we're diving into the story of how George Soros made $1 billion and almost broke Britain. If you enjoy our content, don't forget to like this video and subscribe to our channel for more insights into the world of finance and entrepreneurship. George Soros, a Hungarian-born investor, has become a name synonymous with both financial success and political influence. Born in Budapest in 1930, Soros survived the Nazi occupation of Hungary and later fled the communist regime to study in London. His early life experiences shaped his worldview and his approach to investing. His quantum fund, a hedge fund known for its aggressive investment strategies, has yielded enormous profits throughout the decades. Established in 1973, the fund quickly gained a reputation for its high-risk, high-reward approach, attracting investors from around the globe. Soros, however, remains most recognized for his audacious bet against the British pound in 1992, a move that netted him $1 billion and earned him the moniker, the man who broke the Bank of England. This event, known as Black Wednesday, was a turning point in financial history, demonstrating the power of speculative trading. Soros's journey to financial notoriety is intertwined with his understanding of global economics and his willingness to take calculated risks. His investment philosophy, often described as reflexivity, emphasizes the feedback loop between market participants' perceptions and the actual state of the market. He possessed a rare ability to anticipate market trends, often taking contrarian positions that would yield significant rewards. Soros's insights into market psychology allowed him to capitalize on opportunities that others overlooked or deemed too risky. This video delves into the events leading up to his most famous trade, exploring the economic landscape of the time and the strategic brilliance that propelled him to legendary status in the financial world. The early 1990s were marked by economic uncertainty in Europe, with the British government struggling to maintain the pound's value within the European exchange rate mechanism. While his financial achievements are undeniable, Soros is also known for his philanthropic endeavors. His commitment to social causes is reflected in his substantial contributions to education, public health, and human rights. He has channeled billions of dollars into promoting democracy, open societies, and human rights worldwide through his Open Society Foundations. Founded in 1984, the foundation operates in over 120 countries, supporting initiatives that aim to build vibrant and tolerant democracies. However, it's his financial acumen, particularly his billion-dollar bet against the British pound, that continues to fascinate and inspire investors and economists alike. Soros's ability to foresee the unsustainable nature of the pound's valuation and his decisive action on Black Wednesday remain a testament to his profound understanding of financial markets and his willingness to act boldly in the face of uncertainty. The aftermath of World War II saw Europe devastated and economically fragile. Cities lay in ruins, industries were shattered, and millions of people were displaced. The continent faced an immense challenge in rebuilding its infrastructure and economy. In a bid to rebuild and promote stability, several European nations came together to establish a new financial order. The Marshall Plan, initiated by the United States, provided crucial financial aid to help European countries recover. This plan was instrumental in revitalizing the European economy and fostering cooperation among nations. This collaborative spirit led to the creation of the Bretton Woods system in 1944, which pegged the value of major currencies to the US dollar, effectively establishing a fixed exchange rate regime. The conference, held in Bretton Woods, New Hampshire, saw delegates from 44 allied nations come together to design a framework for international economic cooperation. The Bretton Woods system aimed to prevent competitive devaluations and foster international trade. By stabilizing exchange rates, it provided a predictable environment for international business, encouraging investment and economic growth across borders. It provided much-needed stability and facilitated the post-war economic recovery. Factories resumed operations, infrastructure was rebuilt, and economies began to grow. The system played a crucial role in the economic resurgence of Europe during the late 1940s and 1950s. However, the system had its limitations. It relied heavily on the strength of the US dollar, which was backed by gold reserves. This dependency created vulnerabilities, especially as the global economy expanded and the demand for dollars increased. By the early 1970s, mounting inflationary pressures in the US, coupled with a growing trade deficit, strained the Bretton Woods system. In 1971, President Richard Nixon announced the suspension of the dollar's convertibility into gold, effectively ending the Bretton Woods Agreement. This decision marked the beginning of a new era in international finance. The collapse of Bretton Woods ushered in an era of floating exchange rates, where the value of currencies was determined by market forces. This shift allowed for greater flexibility, but also introduced new complexities and uncertainties in the global financial system. This new system brought both opportunities and challenges. Fluctuating currencies could lead to significant gains or losses in international trade and investment, making economic planning more difficult for businesses and governments alike. European nations, seeking to mitigate these uncertainties, sought new mechanisms for currency stability. They recognized the need for a coordinated approach to manage exchange rate fluctuations and maintain economic stability within the region. This desire led to the creation of the European Exchange Rate Mechanism, or ERM, in 1979. The ERM aimed to reduce exchange rate variability and achieve monetary stability in Europe, laying the groundwork for further economic integration and the eventual creation of the euro. The European Exchange Rate Mechanism, or ERM, was designed to bring stability to a continent in flux. However, the system was not without its flaws. Countries participating in the ERM had to maintain their currency at a fixed rate, pegged to the European Currency Unit, or ECU. This fixed exchange rate system ignored the unique economic conditions of each country, making it challenging to control inflation, interest rates, and economic growth. One notable critic of the ERM was the UK's Prime Minister, Margaret Thatcher. She believed that the system would undermine British economic sovereignty and hamper the government's ability to manage its own economy. Despite her opposition, Britain joined the ERM in 1990 under the leadership of John Major, who succeeded Thatcher as Prime Minister. The decision to join the ERM was controversial and had far-reaching consequences for the UK economy. The constraints of the fixed exchange rate system led to significant economic pressures, culminating in the infamous Black Wednesday in 1992. On this day, the British government was forced to withdraw the pound from the ERM after failing to keep it above its agreed lower limit, resulting in a dramatic devaluation of the currency. The experience of the UK highlighted the inherent weaknesses of the ERM and underscored the difficulty of maintaining fixed exchange rates in a world of diverse and dynamic economies. This episode served as a learning moment for Europe, paving the way for future reforms and the eventual creation of a more integrated and resilient economic framework. By 1990, Britain was in the grips of a recession, but the constraints of the ERM prevented them from adjusting their currency to better suit their economic needs. The British government found itself in a precarious position, unable to devalue the pound due to the fixed exchange rate system. The Bank of England was forced to maintain high interest rates to defend the pound's value within the ERM. This decision only exacerbated the economic downturn, making borrowing more expensive and stifling growth even further. Speculators, sensing the untenable situation, began to bet against the pound. They knew that Britain would eventually be forced to devalue its currency, as the economic pressures became insurmountable. This speculation created a self-fulfilling prophecy, leading to massive selling of the pound and increasing the pressure on the British government. The culmination of these events was Black Wednesday on September 16, 1992. Despite the Bank of England's desperate measures, including spending billions of pounds to prop up the currency and raising interest rates to unprecedented levels, the pound could not be saved. Britain was forced to withdraw from the ERM, and the pound was allowed to float freely, resulting in a dramatic devaluation. This episode was a turning point in British economic history, illustrating the pitfalls of rigid economic systems in a world of fluid and unpredictable markets. It also highlighted the resilience of economies and the necessity for adaptable economic policies. As Europe moved forward, the lessons learned from Britain's struggle with the ERM would shape future economic frameworks, ultimately leading to more robust and flexible systems that could better withstand economic shocks. In the shadow of Britain's economic struggle, one man saw an opportunity that would cement his place in financial history. George Soros, a seasoned currency speculator, began to build a massive position against the British pound in August 1992. Soros borrowed pounds, sold them, and bought German marks, expecting to buy back the pounds at a cheaper rate later. This strategic move was based on his belief that the pound would inevitably devalue. As Black Wednesday approached, the tension in the financial markets was palpable. On September 16, 1992, the Bundesbank president hinted that certain currencies, including the pound, might be in trouble. This statement was a catalyst for Soros. He decided to double down on his bet, borrowing and selling an additional $10 billion worth of pounds overnight. Soros's gamble paid off spectacularly. When Britain was forced to withdraw from the ERM and the pound was devalued, Soros reaped enormous profits. His actions on Black Wednesday earned him the title, "The Man Who Broke the Bank of England," and a billion-dollar windfall. This episode not only showcased Soros's acumen, but also underscored the vulnerabilities of rigid economic systems in the face of speculative attacks. It served as a stark reminder of the power and influence that individual actors can wield in the global financial markets. On Black Wednesday, September 16, 1992, the British government found itself in a dire situation. As the value of the pound plummeted, the Bank of England launched a desperate defense. The central bank began by buying billions of pounds to support the currency, hoping to reverse the downward spiral. In a bold move, they raised interest rates twice in a single day, first to 12%, then to an astonishing 15%. But despite these aggressive measures, the market pressure was too strong. The pound continued to fall, undeterred by the Bank of England's interventions. By 7:30 p.m., the inevitable decision was made. Britain officially withdrew from the exchange rate mechanism, allowing the pound to float freely. This decision marked a pivotal moment in financial history, highlighting the limitations of government intervention in the face of massive speculative forces. The collapse of the pound on Black Wednesday was a testament to the unpredictable and often ruthless nature of global financial markets. The pound fell 15% against the German mark and 25% against the US dollar. George Soros, the man who had bet against the British currency, made an astounding $1 billion profit from his speculative move. On the other hand, Britain incurred losses exceeding £3 billion, a financial blow that left its mark on the nation's economy. Ironically, the aftermath of Black Wednesday brought unexpected benefits. Freed from the constraints of the ERM, Britain's economy began to recover. Growth rates improved, inflation was controlled, and unemployment started to decline. This surprising turnaround led some to refer to the day as White Wednesday, a term that underscored the paradox of the situation. In the end, Black Wednesday served as a powerful lesson in the complexities of global finance, demonstrating both the destructive and transformative potential of speculative forces. Thank you for watching this episode of Entrepreneurial Edge. If you enjoyed the video, please like and subscribe to our channel for more insightful content.